Today is February 8th. Here is an example of an autopilot day trading mode. The blue vertical lines represents the purchases, and the gold line is the sell orders. I made two trades today. One of them was Costco, and the other one was Google. So it's essentially a repeat of what I've observed in the past that I do when this particular situation occurs. So it gaps down in the morning and it's red. And then if I look through here, in this situation, it is going down, but there is really not a clear signal that allows me to go for a call because it's still trending down. And there hasn't, in the morning, what tends to happen is the movement will be either rebound very fast, or it'll go sideways and then it'll find a way to start to decline. And the latter situation occurred in this situation. So the way that the autopilot mode works is that these are the purchases that I did. So essentially there were 8 contracts, very low priced contracts, out of the money contracts for a call. And so when I made these first 3 trades, when the stock was at this point, it was actually in a green territory and it was possible, and this entry and this entry was forgiving because it was actually moving back up and it was actually above VWAP. What I should have known is that when it generated this formation, candle formation, 1, 2, 3, 4, there could possibly be a long-term downward trajectory for the stock based on the news that it was generated, based on Barclays initiates Costco with a 510 price target, which currently at that point was actually above. So essentially, it was actually a downgrade. I should have known this, and I should have taken heed of what was about to unfold. However, by this time, my mind was set at that usually in a bull market, thinking that this is a bull market, what will happen is that it'll dip and it'll be forgiving and it'll move back up. And so purchased a couple more here, and as it went down, I was still not convinced that the stock was about to drop. What I should have done initially was, aside from this, is to, when I saw this point of analyzing where the levels are, constantly monitoring where the levels are, and if it retraces past a certain level, then I should consider selling, because it is an indication that it is about to drop further. And that is something that I need to use in my trading habits. And so at the worst here, I should have removed all shares at about this point here after this candle, and when it went down like that. I should have seen this particular scenario and then should have exited, but I did not. When I'm in a autopilot mode, what I would do is, even though it's down significantly, I will attempt to recover what I have by averaging down, and this is exactly what I did here. And that's what most people lose money on, and that's what I did. And I've done this about 90 times last year, and this is the 4th time this year. And the year is young. And as I started to look at things, and I become numb to the decline in the amount, and it briefly went up and recovered somewhat, and then at this point, after it went close to the VWAP, it started to decline. At this point, it was the loss was so heavy that it just retraced for initially approximately about 2 hours. It went sideways for 2 hours, and then afterwards it started to decline even further. And so at this point, the loss, the drain on the account was so severe that this was the point where I had to exit, because it is possible that it's going to jump up, and it is possible it's going to keep going down. And sure enough, after I sold, it retraced about approximately $3, which I could have recovered a significant amount if I had waited a little bit longer. But that's how the trade went. And this is a primary example of being locked in to a particular thesis and just keep adding and adding, regardless of the way that the pattern is being formed. And that's why I suffered a significant loss. So the other is Google, and Google was also another particularly devastating loss today, which essentially eroded the over 1 month of gain that I had. So it was a familiar story at this point because I was so eager, not sure why. It's not even on Monday, and I was so eager to enter. And I got in here thinking, usually when I see this is, first of all, this is an incorrect entry because the setup is incorrect. I was thinking, what I was thinking is that when I saw this candle and this candle moving back and forth, that it was about to move back up. However, when I see this, which is an engulfing candle here, I should have immediately rethought about the particular trait of this movement in the candle, and I should have exited instead of buying more. 1 red, 2 and 3. On the third, just essentially being in an autopilot mode, and I entered here again, which caused a greater amount of damage here. So I briefly retraced a little bit and it came back up. That gave me more impetus to add, because I'm looking here, I'm looking at this particular line, which is essentially setting up a support line at this point. So you retrace, so I added here, thinking after seeing this, thinking that it's going to keep back up, but that's something that I should be reserving that for later on, because that happens maybe in a later on time period. So after I added here, the loss was somewhere manageable, at a certain manageable level compared to what Costco was doing for this day. And so I added here at this point, thinking, not realizing this VWAP is essentially is creating a resistance line. That's the resistance line. And as it dropped further and further, looking at what the news was telling about this Google stock, was that there were a couple of situations where competition was heating up, and the fact that one of its AI was incorrect in a certain fact, and that accentuated the heavy selling that occurred. And then, because I was still in an autopilot mode, I'm thinking, okay, so I got to keep averaging down here because I'm thinking it's going to come back up, not realizing the significance of the stories in the background. So what I need to do is keep working on the fact that I'm looking at the chart formations. What I can derive from the trade that I made is that these candlestick formations tell a story, and I need to react based on the formation of the candles and allow the candles to guide the way that I trade. And so when I look at these candles, then it is telling me whether I should be, each candle should be telling me whether I should be selling or holding, or one of those two things. If I am already in the trade, then each of these candle formations need to tell me once, and formations need to tell me what I need to do on the next candle. Should I get out? Should I hold? Or should I sell? Okay. Should I sell? Or do I buy? Or do I hold? Or do I sell? Those are the three things that I need to do on every candle that I see. And the news was significant, so significant that it actually caused a low of the day at this time at around about 9:30. Had I bought it here, even though the market was down this much, I would have made a significant amount of gain. But when all my trades occurred here before the real move occurred, which caused me to be on the wrong side, and I was already locked into this, committed to this trade, and I didn't realize that I had to wait longer until I saw some sort of structure like this, right? Something like that. I mean, if I saw something like this line right here, it would have given me an opportunity to this would have given me the opportunity to enter and then take some profits here. Even if I didn't take the profits, at the end of the day, towards the end of the day, eventually it would have been above where I bought the trade. So I saw how the trades were going. I sold some here, and a little bit later, at a lower price, I sold out here completely on this transaction. So essentially, what I did was create a situation where I've committed myself to being in autopilot mode. And that autopilot mode caused me to make these trades, which caused essentially it's called a blow up. That's what happens when the account initially is annihilated. So what I need to do is look at each of the candles, and now I look at Al Brooks trading, and I'm thinking to myself, the reason why he's analyzing every candlestick formation is because he's understanding what its behavior is so that he can make decisions on how to trade. And I mentioned this about how beautiful his trading is based on the multi-time frame, and each of the time frame in itself creates a story that can also be told in a more finer incremental candlestick chart formations as well. And so what's leading me now is to understand the behavior of these candles, and I need to be constantly monitor what these candles are doing. Obviously, when 1, 2, 3, that is essentially a bearish signal. Even if it comes back a little bit, you know that that's a serious sequence of events that occurred that is telling me, okay, here, if it goes up, I better figure out, how to get out, because this is a significant candle here. Look at these candle formations. When a string of particular events occur, it is stating that it has a significant intent. So when there's a mixture of small little green candles with red candles, it is essentially saying, okay, a lower low and lower highs, which is essentially saying that it's going to continue on its journey to moving down. And I should have been more careful about how I traded, and 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 the previous days of trading and then making mistakes and because the market was so forgiving that I was able to take advantage of that particular situation. Therefore, what I need to work on now is clearly defining a finer imprint of how I need to trade. And how I need to trade is, once I get in, I need to monitor what the progress of the stock is uh, incrementally, instead of waiting for a particular situation when that situation has already moved in a direction that's contrary to my trade. However, when the trade is going my way, waiting for that particular time is a great idea to do. Great idea, because it's moving up, and so I didn't have to watch it. But when it's moving down, then I need to figure out, is this move a significant move that will create a further move against my thesis? If I determine what that is, then I need to exit. Now, this is something that I need to be more aware of starting tomorrow. So I have 2 more days, Thursday and Friday, to figure out what I need to do. Um, and so um, this is exactly, this is essentially, this is essentially an autopilot mode. add, and just watch it. That's mindless trading right there. And then here I get to the point where I really feel it. I don't feel it here, even though the trade has gone the opposite direction. I'm thinking there's hope, there's hope, there's hope, there's hope. It's going to come back up. It's going to come back up. But I'm thinking that's what I'm thinking. But eventually, what it did is it just ended on a low. So that is a perfect formula for a severe loss. That's Costco. Now, Google is another very, very similar story. This is a perfect story for if I was on the other side. This is exactly what I should have done. I should have bought puts here and then held it, and I could have sold here for a modest profit. That's what I should have done. Or inversely speaking, if the trade was in this manner, then this would be a perfect situation to unload those puts that I bought, if that was the case. But in this case, what I did was I essentially just eradicated my account by just mindless trading. Hopefully tomorrow, so right now, tomorrow will be a different story. For right now, I'm looking at this situation here, looking at this, and I'm looking at this is the hindsight view of what's really going on. See, this goes down, it comes back up, right? So this, 1, 2, 3 things happen here. 1, 2, and that's how it works.